Welcome to this FAQ presentation. My name is John Belizaire, and I am the CEO of Soluna Holdings. I'll be answering shareholders and potential investors' most asked questions about our recent HPE Termination event over the next few slides. If you'd like to see these answers in written form, please visit the link in the show notes or visit our website at solunacomputing.com/blog. Let's get started. Before we begin, I'd like to read a legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one. Our goal is to share with you some of our strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with shareholders. And we operate in a hyper-dynamic economic environment. That's a fancy way of saying things change quickly. What we are telling you here is based on our estimates and assumptions, which are our best guess. We reserve the right to revise our point of view based on new information and changes in the business environment. Despite an uncertain, dynamic environment, we must plan and make operating and investment decisions. This presentation lays out some of that for your review. The first question, of course, is what happened? Well, in 2024, we launched a GPU as a service business under the subsidiary Soluna Cloud Incorporated with two primary objectives. One was to gain commercial expertise and experience in the AI HPC market in support of our future data center development business, and also focusing on large language models and AI-ready data centers. The second was to capitalize on lower costs of capital to pursue high-growth revenue opportunities in the computing infrastructure space. Now, when we entered the market, we entered as Soluna AI Cloud LLC, one of our subsidiaries. It's a wholly owned subsidiary of Soluna Cloud. And we entered into a contract with Hewlett-Packard Enterprise on June 18th of 2024. That provided access to GPU clusters to service the emerging generative AI market. At the time of the launch, the market for NVIDIA H100 GPU clusters was characterized by constrained supply and strong pricing, which aligned with the economics of Soluna's fixed cost hardware procurement agreement with HPE. In other words, we saw increasing demand. We saw a robust demand at the time. However, by the end of 2024, the GPU market had shifted significantly. The lead times for the H100 GPU shortened over the 52 weeks in 2023 to about 8 to 12 weeks by 2024, and easing supply constraints and reducing urgency among buyers. At the time, market demand shifted toward larger GPU clusters than those available under the HPE agreement, making it difficult to secure long-term reserved contracts at profitable rates. That's the key point. It became challenging for us to land contracts that were longer term, aligning with our agreement with HPE that were profitable. The expected release of NVIDIA's H200 Blackwell architecture also caused some customers to delay their purchases of H100s and earlier chips. Although release times were impacted by design issues, the prospect of next generation technology contributed to people hesitating in the H100 acquisition space. There were also competitive pressures, a lot more entrants in this space. GPU vendors further led to a softening of the demand and market pricing as well. So Soluna Cloud's business progressed more slowly than anticipated, and revenues were first recognized in December 2024 with modest growth in early 2025. During the last 6 months, we engaged with potential financing and operating partners for AI and HPC that confirmed that rather continuing the effort to lease GPUs was better focused on our core strength, which was creating, developing, financing, and operating our existing pipeline of data center projects for both Bitcoin and AI hosting facilities, which in the long term, we believe will create far more value for the company and our shareholders. So in light of these developments, on March 24th, 2025, Soluna AI Cloud and the company formally notified HPE of its intent to terminate the HPE agreement and related statement of work. And in accordance with those termination provisions in the appropriate sections in the agreement, you can see it in the written form here. And subsequently, HPE also sent us a notice terminating us for cause effective immediately due to Soluna AO Cloud's material breach of its payment obligations under the contract. Next question is, what is the exposure to the company for outstanding customer contracts and SLAs? Well, as outlined in the summary in the previous question, we signed mostly on-demand agreements with customers, which included the right to reclaim those GPUs with a notice period. All customers and partners have been notified about the termination, and a wind down process for some of those contracts is currently underway. The next question is, what is the exposure to the company for the termination of the agreement? Soluna AL Cloud notified HPE about a termination for convenience, and this form of termination does not remove the obligation to pay all remaining payments on the contract. Under the agreement, HPE has some obligation to mitigate this exposure by reselling those GPUs to other customers, for example. HPE subsequently terminated the agreement for cause, which likewise does not remove the obligation of Soluna AL Cloud to pay all remaining payments on the contract. This obligation and the guarantee by Soluna Cloud of such obligation does not have the corporate guarantee of Soluna Holdings. Next question is, what are the next steps for Soluna Cloud's business? Soluna intends to focus on the development of our power pipeline for both Bitcoin hosting and AI infrastructure. So the company is really pursuing joint ventures with leading data center operators to partner with us on the development of advanced data centers for AI at these project sites. So Soluna Cloud will be focusing on the development of those projects going forward. Will you purchase the equipment from HPE? Do they remain a viable vendor for GPU hardware? Well, HPE retains ownership of the GPUs, allowing them to resell them. We talked about that in a previous question around mitigation. The contract delivered the equipment to Soluna as a managed service as part of the HPE GreenLake AI business unit. What impact does this have on the green cloud notes used to finance this deal? As we announced in an 8K that we filed last week, based on the recording of this, there were certain modifications made to the green cloud note to ensure that the HPE agreement termination would not have any direct impact on the loan and the company's obligation thereunder. The company expects to continue to service the loan as part of these modifications. Will this decision negatively impact Soluna's AI HPC business or ability to raise capital for future projects? We do not expect this to impact our reputation as a renewable energy powered data center developer. Our core business remains sound and its application to AI remains viable. Our foray into the AI GPU as a service, while not successful, has helped the company understand the AI infrastructure market and potential opportunities for our continued growth. We have active discussions with joint venture partners to develop some of our project pipeline into AI data centers. The partners include data center operators and leading neo-cloud providers, companies providing GPU as a service today. And we have a real need for, they have a real need for co-location and data center space. So by exiting the GPU as a service business, we can be a more collaborative partner for these companies. What has changed that caused you to apparently pivot away from the GPU as a service? Well, in the opening question, I went through this essentially at the launch of the Marketplace 100s clusters. The demand was strong, but it quickly shifted to falling demand, declining prices, and customer preference for much larger clusters, making it difficult to secure profitable long-term deals. The profitability of the deals was a real challenge for us. While there was growing and increasing demand, doing those deals at a profit made it difficult for us. And so we decided to move away. In the printed section, you can go through the detailed timeline and activities. But as we learned more, In the market, it became apparent that deep expertise in chip leasing and resale was not nearly as significant for the success in the AI space as expertise in power, land, and data center development. Will this negatively impact Soluna's digital assets, Bitcoin hosting, Bitcoin mining business? We do not expect this to impact our core business lines of Bitcoin hosting, Bitcoin mining, and of course, our new HPC business focusing on the data center side. Each of these businesses are standalone silos. On a consolidated basis, this will affect the business in two ways, though. Number one, continuing payments to green cloud debt will be required with no offsetting revenue from the decommissioned HPE business. And two, although confined to the Soluna Cloud subsidiary, potential disruptions from any HPC actions related to their rights under the contract may be present in that business. We do not expect the financials for this agreement to continue as part of our 2025 and beyond financials. Why not renegotiate the HPE contract rather than terminate? We did explore restructuring options with the HPE organization. We actually have a pretty good relationship with the business unit and the sales organization. The restructuring discussions were focused on trying to address the profitability of the service and supporting scaling for the growing pipeline. Unfortunately, we could not come to an agreement on the approaches that would benefit both parties. We certainly appreciate the collaboration with HPE, but we had to do what was best for Soluna, and termination was the only option that made sense absent some form of major restructuring or repricing of the contract. What was the rationale for the HPE cloud deal at inception? Well, in 2024, Soluna launched its GPU as a service business under its subsidiary Soluna Cloud with two primary objectives. One was to gain commercial experience in the AI HPC market in support of our future data center development focus on the data center side for these large compute-intensive applications like large language models. And the second was to capitalize on lower cost of capital. We raised this capital at a lower company project level, if you will, to pursue high growth revenue opportunities in the computing infrastructure market. How much has Soluna already invested in this? How much revenue did it get? What is the cash loss? You can see all of this by reviewing our 2024 10K and investor presentation, which will be available on our Investor Center at solunacomputing.com. You can also go to the SEC website and download the 10K that has a full MD&A that goes into detail on the core business and the P&L for the cloud business. What's the team's strategic focus for 2025? Hosting BTC, AI, does Soluna expect to purchase or rent chips in the future? We do not currently have plans to purchase or rent GPUs in the future. In 2025, we are focused on advancing the company in the following key initiatives in our various business segments. First is we're going to be focusing on expanding our pipeline. We plan to scale our operational footprint by energizing D2, commencing construction of the 83 megawatt Bitcoin hosting phase of Project Dorothy. Together, these projects are expected to advance our path forward over 200 megawatts of operational capacity under management. The second is focus on AI infrastructure development. We aim to form joint ventures with leading U.S. data center operator and developers, including top global infrastructure companies and hyperscalers as financing partners. And our initial efforts will focus on launching a AI phase at one of our major projects at Project Kadi, with the goal of establishing our first portfolio of advanced data centers purpose-built for AI workloads. The next is we continue to prioritize improvements in profitability, operational efficiency, customer mix, satisfaction across all our existing data centers. And of course, our goal is to drive consistent execution and deliver best-in-practice performance for our customers using a new service model we call relentless stewardship. And we will continue capital formation activities where we plan to pursue targeted capital raising initiatives to support both near-term project development and long-term growth across our platform. the recent Galaxy financing is a good example of that. Thanks again for tuning in. If you're reading this and haven't had a chance to ask your questions, please fill out our AMA form you'll see at the bottom of this recording. The text for this is available on our website, solunacomputing.com. Please follow us for more updates. We're at X, Soluna. We're at Soluna Holdings on X. We're also on LinkedIn. See the Soluna page. And of course, join our newsletter to stay current with our upcoming catalysts and news and financials.